talking about the worries of a stagnant economy, i.e. no growth. So clearly that's got to be one of the key concerns for government going ahead for this year.
We're now in the run-up to the spring budget, Mark, on March the 15th. You and I are going to be talking about it a lot between now and then, indeed on the day. And there is an increasingly fervent debate going on the Conservative backbenches in particular, but also between the political parties, because we've already legislated to increase corporation tax from 19 to 25%. This is a tax on firms' profits.
Yeah.
But if you've only got a tiny margin, you make very small profits with lots of volume, like the company Cleveland Fasteners there that we just heard from, then to take 6% off your margin could kill off the business, particularly, Mark, when so many businesses, particularly so many manufacturers, have high energy bills.
Yeah.
Steve Hardiman's bill there from Cleveland Fasteners has gone up from $5,000 a month to $16,000 a month in the last year and a half. And now it's going to go up again a lot in April when the government takes away that emergency support. So that, plus corporation tax, it makes you fear for the business. And if a business goes down, it will pay no tax at all.
Yeah.
So will this corporation tax rise actually lead to more money for the Treasury?
Yeah.
A lot of people think it won't.
Basic sum saying fewer firms, less money.
That's right.
However, I mean, the government's pointing out, look, if firms such as manufacturing firms invest and spend capital amount on new plant and equipment, that can be set against
to some degree, but the super deduction, which allows them to do that in spades, is also being removed. Right. This is the problem. And big firms have cash reserves to invest and get around corporation tax legally, but avoiding corporation tax with using offsets and so on. You know, SMEs don't, the small and medium-sized enterprises, which employ 2/3 of our people. This is really rough, and you don't have to be a big company to pay corporation tax.
And the other problem, when you're doing your sums, is it's now costing them a hell of a lot more to borrow to tide them over any shortfall.
It's higher interest rates, it's still high costs in the supply chain. Again, that manufacturer in Sutton Coldfield, their main inputs are steel, stainless steel, and brass, right, for making those rivets. You know, the company was founded to basically bolt Spitfires together, literally. An incredible company with a world-class global reputation. The steel that they use, it's doubled in the last year. The stainless steel, it's tripled in the last year. The brass that they use, up 5-fold in the last year. Yeah. So when that's happening to your cost base, and then also your energy costs have tripled, and then they're going to go up again in April when the emergency support is withdrawn. Yeah. Do you really need another 6% taken off your balance sheet?
No.